This video is about strength and weakness and how I determine what is a strong currency and what is a weak currency for the day, for the session. This is being done on the 14th of January 2021. Still can't believe 2021. Jeez, oh. Anyway, earlier today I said about how I was expecting pound dollar to go higher, Euro CAD and Euro Aussie, dollar CAD, and Euro Aussie to go short. Pound dollar's gone higher, dollar CAD and Euro Aussie's gone short. So I hope that you've made the most of that in terms of the trading opportunities. And yeah, let's get into this video. So this video is basically going to be on the different currency pairs. Again, this channel that I'm doing, all that I'm doing isn't really for straight out beginners. It's not. It's for people that know what they're doing and they just want to try and improve in some way. I'm not going to sit here and say, "Oh, I'm the best in the world," and I'm wanting to overcomplicate things that then it makes it easy to say why something didn't work. Like, to me, that's Wyckoff, etc. It's just very easy to be like, oh, this wasn't quite this or this wasn't quite that. And that's the premise of why I've called the channel and what I'm doing Simple FXC. Because even though it's not simple, in terms of it's not easy, it is relatively simple in comparison to others out there. And I feel that this is just price action and understanding kind of medium, immediate, and longer term on the timeframes that matter. So 1 hour, 4 hour, daily, everything below the 1 hour to me is basically timing. And I wouldn't look below the 1 hour unless the 1 hour told me to, unless it was a very, very short term trade, as I've gone over in other videos. Anyway, the point of this video is basically to show how I determine what I see as strong and weak. Now, obviously, I'm just making this bigger now so that you can see, but obviously, we've got all the different pairs: New Zealand, Aussie, CAD, yen, dollar, pound, euro, and obviously the dollar is pretty much the most important. If it's moving or if it's doing something, then the rest of the market's going to react, whether it's going down, euro dollar, pound dollar, etc. I'll do another video on correlation actually, but that is essentially the kind of foundation of the market is the dollar. But then you've also got the currencies that obviously move more in the sessions that they are being traded, especially kind of Aussie and New Zealand. Obviously, they still move in European and US sessions. But if you're to trade the Asia session, which I don't personally trade it, even whenever I've been traveling in the Far East, etc., I've not traded it. But if I was to do it now, I would definitely just focus on those kind of pairs. And you still probably could get some kind of lower time frame move that you're not as likely to get the moves you do in London and New York, like what we're seeing in Euro Aussie just now. That's gone like 50 pips in a couple of hours. At the end of the day, that's all you really need to make the trade worthwhile. So what I do for strength and weakness is I've obviously got my eye on the DXY. I do the kind of weekly breakdown for that, or at the weekend for my week ahead, what I think the dollar is going to be. Do I see it more bearish? Do I see it more bullish? And then obviously using that as a way to kind of to base my analysis basically. So for today, you can see that the Aussie dollar and New Zealand dollar have been the strongest, and the dollar and the yen have somewhat been the weakest. Now, the change, I do it not by change up way, change down. I do it just normal, but you have to click it to then reset it basically. So if I left it like this for a few hours and I came back, obviously the numbers would be different, and even though the numbers would be different, it doesn't show you the scale in terms of like the best to the worst. because you have to reset it essentially, and that just takes a couple of clicks. So what I do that for is basically I've got all the pairs that I trade and ones that I don't trade, like Euro Pound, New Zealand CAD, etc. But I want to see it as like the whole picture. I want to see the whole picture. I want to see what, even if I only trade, say, New Zealand dollar, New Zealand yen, and Euro New Zealand in New Zealand, I want to see how it's reacting against everything else. And then if I see something like Euro Aussie and Euro New Zealand both going short, I want to see, right, well, out of Aussie and New Zealand, which one is stronger? Because then obviously, if I'm looking to short, I would want to take it against a stronger one. So that's the way that I work it basically. I just do that, and I do that kind of the start of new 4 hours, kind of whenever I'm preparing for the new 4 hour, 10, 15 minutes before, see what's happening. Obviously, I'll have done my candlestick analysis before, I'll have done my structure, I'll have done everything before, and then it's just a case of, right, okay, well, if my bias is short on these pairs, then it makes sense as well with the strength and weakness, like dollar CAD, etc., being short. It makes sense due to the fact that the dollar's been so weak. And you can see that both with the DXY and the dollar. Then you've got obviously dollar yen, and the ones that are in the middle are usually pairs that I don't trade anyway, because I feel that currencies that are so closely correlated, Euro Pound, dollar yen, Aussie New Zealand, Aussie CAD, New Zealand CAD to me as well, because obviously they're both commodity currencies. They are usually the ones that, if it's a trending day, like today, we've got ones that are close to 0.8% from the open price. That's the Euro Aussie, for example, 0.7% from the open, down from the open today, which is a decent amount for a day trader. You can see that, look at the candle on the daily, you can see that that's a good move. And you would want to be on the end of that. You would want to be in that. So yeah, I always feel that whenever I'm looking, apart from euro dollar, because the euro and the dollar are both very weak, the euro dollar is pretty similar, but it's just using this table as a way to kind of see, right, okay, well, this is my bias, this is my technical aspect, this is my technical thoughts, this is my using my knowledge of charts, but then this is how those pairs and those currencies look in the overall picture. Would that help or like make me want to look at something a bit differently? Like, for example, if you've been looking at euro dollar and you've been technically thinking, right, I probably want to take it long, which it is going long just now off of an area that makes sense, but out of the euro and the pound is stronger, so it makes sense if you're thinking the dollar's weak and you have a bias for both pound dollar and euro dollar to go up, it would make sense to trade pound dollar rather than euro dollar to the upside, because the pound is currently stronger than the euro. Clearly, you can see by the euro pound chart. So it's just simple things like that that can just really help you decipher what pairs to trade, and just get in the habit of looking at it kind of a couple of times a day, 2-3 times a day. Whenever you first wake up, looking at the charts, the first 4 hour candle close, and then the one in the afternoon. So it's usually 2 4 hour candle closes, and then whenever I wake up in the morning. So like 3 times I look at it, and then that kind of sets me up, because 4 hour candles, they don't change anything in the bigger picture, really. They don't change that much. They just kind of, like, it's just 4 hours. But it can then mean that, right, okay, well, if this bias from the previous day or earlier in the morning was this, but then actually I need to take into account that I was thinking longs, but actually now that one of those currencies is basically weak against everything, so it actually could still go long, but I would rather focus on something else that is more likely to go long for longer. So yeah, that's basically the gist of how I use my strength and weakness full list to then be able to guide my trading into the right pairs, so that I'm utilising the weakness of euro, for example, so looking for euro Aussie short rather than pound Aussie short, even though I don't trade pound Aussie, or looking for pound dollar strong, pound dollar longs, which I have taken today that I'll do a separate video on, rather than euro dollar longs. So it just helps a lot in that, so that you can make better decisions that therefore allows you to take better trades more often, which at the end of the day, once you've got your levels on the 1 hour, the 4 hour, the daily properly aligned, you're already, to me, in my eyes, 70-80% of the way there of being consistent. The rest is just timing and picking the right pairs to trade on a daily basis. And this is one of the ways that helps me a lot in terms of what pair to trade if I've got multiple pairs that could be lining up technically.